How would you like to get rid of your monthly MI premium? I'm getting lots of calls right now from my clients about how to lower their payment without refinancing because insurance has gone up, property taxes have gone up, and so they're looking at their statement and say, hey, maybe I can get rid of that for those of you that put less than 20% down. So I'm going to explain how it works in this video. So first off, there's two loans that have MI. FHA is called MI, and conventional, technically it's called PMI or private mortgage insurance. I just call them MI because they basically are the same concept. They're lender's insurance against default, and they're both required in certain situations. So for FHA, it's really cut and dry. FHA used to have a rule that if you've had the loan for 5 years, you can get rid of MI after you had 20% equity. They changed that in June of 2013. So for almost all of you that have a loan, an FHA loan originated after June of 2013, you're going to have lifetime MI unless you put 10% down. So what they made a new rule in June of 2013 was if it's 10% down or more, your MI goes away automatically after 11 years. So 11 years. However, if you put 3.5% down or even less than 10%, then it's for the life of the loan. So how do you get rid of it if you're FHA? You refinance, and you can't refinance if your rate's really low. So I want you to feel comfortable knowing this. If you have a 2 or 3 or 4% rate and the MI premium you have is probably either 0.85 or 0.55, and you add that to the rate, it's still way lower than where rates are at right now. So what you do is when interest rates get into the mid-4s, we want to revisit that because we can then refinance you, recast your loan back to 30 years, get rid of the MI, and that'll dramatically lower your payment and give you better cash flow. So that's FHA. So what about conventional? Conventional is different. Conventional is certain federal protections on how to remove MI. So it comes off automatically once your loan to value. So that means what the percent, your loan as a percent of the purchase price of the house reaches 78%. I want you to understand real clearly, that's not the current value, it's the automatic renewal is, let's say you bought your house at $300,000. Let me just grab a quick calculator here just to give you an example. So let's say we bought it at $300,000 and your loan, or you had a loan amount of $300,000, or you bought it at $300,000. Let me go back to that. Your loan amount, when your loan balance gets to $234, which is 78% of the purchase price, it gets removed automatically. However, that could take a while unless you're making extra principal payments. There's another way to get rid of it, and many of you would qualify for this due to home appreciation. Once your house has 20% equity, you can request its removal. And so how you do it is as follows. You call your servicer who's currently collecting your monthly payment, and you tell them you'd like to get the mortgage insurance removed. They're going to require for you to pay for an appraisal inspection. Now, just so you know, you can feel comfortable paying for it. They don't try to influence the appraiser one way or the other. You simply make the payment, the appraiser comes out, appraises your house, and if there's sufficient equity, then the bank will remove it. They usually want you to have the house at least 12 payments before they'll allow you to do this, but in almost all cases, you're not going to have that 80% equity within 12 months anyways. So you go ahead and you pay for the appraisal, and then once the appraisal comes back in, as long as there's at least 20% equity, they'll remove the MI. The process typically takes about 90 days because you call in, it takes several weeks for the appraisal to come out, and then they have to generate the report. And so what you do is you start the process and just sort of follow up very vigorously on your end to make sure it doesn't slow down due to you. But once the appraisal comes back in, your servicer will remove it and your payment will be gone. And I've had many, many, many clients successfully do that. I've done it in the past myself, so it's not hard to do. That's the way you get rid of MI permanently. So if you're looking to buy or sell real estate or refinance, keep an eye on rates. Make sure you're giving me a call. I'll build you a great mortgage plan. My name's Todd Baker. I'm a certified mortgage planner and DFW Mortgage Master, and I help people create wealth through mortgage planning. Hope you have a great day and hope you found this video helpful.